The conventional wisdom is this is the world's greatest asset class. Well, it's going to be $10 million a coin, and you're going to pay 100 times more. You can make a lot of money if you are willing to do the work. If you're willing to do the research and spend 10 hours thinking about this, or 100 hours, you can buy Bitcoin for a 99% discount. If you wait until the year 2035, your bank's going to tell you, yeah, it's easy, we all support it, it's good, well, Labar gets it. Then you're going to pay 10x more. Our corporate guidance is targeted at $150,000 by the end of the year. I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 21-year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point.
Today, as Bitcoin rebounds back above $100,000 after dipping into bear market territory, and billionaires like Elon Musk sound the alarm amid Bitcoin price crash fears that we could witness something much worse in the weeks to come. But Michael Saylor issues a warning to all Bitcoin and crypto holders, and the sell-off we're seeing is only the beginning. The Bitcoin tsunami that's coming will change crypto forever, and Saylor discusses the inevitable collapse of the fiat money system as we know it, and says there's a plan to take over Bitcoin and crypto. With BlackRock being one of the biggest players to get into the space, this will be the least of our concerns, as entire countries are now coming for Bitcoin, with the current price sitting just under 102,700, still down over 15% in the past month. In this latest interview, Saylor discusses why it's more important than ever that nation-states adopt Bitcoin and incorporate into the global economy before the inevitable collapse of the current monetary system as we know it. Everyone's focused on tariffs, inflation, and the so-called weak dollar, but Michael Saylor is seeing something completely different, and it might be the most underreported economic shift of 2025. Behind the scenes, the US just pulled off what could be the biggest corporate tax cut in modern history without even changing the official rate. Through new depreciation rules, companies can now write off almost everything, and that drops the effective corporate tax rate to somewhere around 10 to 12%. That means the US just became the lowest taxed major economy on Earth. Let's get right into the latest interview with Michael Saylor, as he gives us his prediction for Bitcoin in the coming months, and why a massive surge in capital is about to pour into the space. Drop your comments down below and subscribe if you enjoy the content we do here.
You know, there's been about half a dozen massive milestones in the past 24 months. The first one was the approval of spot Bitcoin ETFs in January of 24. And that sparked the explosion and the explosive success of IBIT, which went from 0 to $100 billion in less than 2 years, and it's the most successful ETF in the history of Wall Street. So that was a big deal, the endorsement of the SEC. The second big deal was the red sweep in November when you had a pro-crypto, pro-Bitcoin administration. We went from one supporter in the cabinet, Gary Gensler was a Bitcoin believer, 1 out of 12, to all 12 cabinet members, the president, the vice president, the head of the SEC, the head of the CFTC, the head of the Treasury, the head of Commerce. I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. Mm-hmm. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against you. You cannot get a loan. You could post, you have $10 billion of Bitcoin, you can't get a $1,000 loan from a major bank right now. Mm-hmm. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have the liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. What percentage of the equity in your big tech company would be sold by employees? When they all got insanely rich, probably 10, 20%, right? They would sell at least. So we're waiting for that to boil off. And we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures, and they should be, right? I mean, you know, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional, traditional banking establishment to get spun up, where they're custodying the asset and they're extending credit against the asset, and it's worked its way into systems. I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself. It's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right? So it's like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offer me nine bananas, I know what 9 is, right? Because we both use the same numbers in the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank, and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you, right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in a currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index or New York or London real estate. Or maybe sports teams, if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital, right? If I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone.
Embracing an unyielding enthusiasm for the Bitcoin realm, Saylor and Lee confidently predict that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Lee and Saylor reassure that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
I would submit to you, there's not a single thing you would buy in Africa. There isn't the capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take your, if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. If the trillion-dollar banks are willing to custody and they're willing to extend credit and they're willing to handle the asset class and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds. The consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year. I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 21 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point. My message is if you live in Argentina and you've watched the currency collapse completely every 20 years for the past 100 years, and if your family was impoverished 5 times in the century, and an engineer named Satoshi came along with a way for you not to be poor and destitute, and he said, well, it's no more difficult than just put this wallet on your iPhone and now you don't have to be poor. Then you would be utterly captivated by that vision. And that is the plight of everyone. If we go on my hand and say, how many people have lived in societies where they had their property rights and their wealth stripped away from it? It's everybody in Africa, everybody in South America. Brazil's currency collapsed, Argentina's currency collapsed, Cuba's got no currency, Venezuela collapsed. Everybody in the Middle East, people in Turkey right now. Russia collapsed 30 years ago, Russia's collapsing now. Everybody in Ukraine, everybody in China doesn't trust their currency, right? Everybody in Europe doesn't trust their currency. So if you're a skeptic, you must be an Upper East Side trust fund baby, and you're lucky enough to be born rich in the only country in the world where the currency didn't collapse in the last 100 years. And you know, your currency's lost 99.9% of its value over 100 years. The US dollar has debased 7% a year on average for 100 years. So you're probably smart enough, if you're wealthy and a skeptic, to know that you shouldn't store your family's assets in cash dollar bills. You're probably smart enough.
In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this.